Have you ever wondered why some people seem to get richer every year, even without working more hours? The answer is simple. They don't just work for money, they make their money work for them. Imagine earning money while you're sleeping, on vacation, or spending time with your family. It might sound impossible, but it's exactly how many wealthy people build their wealth. The good news? You don't need to be a millionaire to get started. In this video, I'll show you 7 proven ways to make money from your money, explain how each one works, and help you understand which methods are best for beginners. Let's get started. Most people follow the same cycle. They work hard, get paid, spend most of their paycheck, and repeat the process every month. There's nothing wrong with earning money through a job. In fact, it's where almost everyone starts. But if your income only comes from the hours you work, there's a limit to how much you can earn. Wealthy people think differently. They use part of the money they earn to buy assets, things that have the potential to grow in value or generate income over time. Instead of asking, how can I earn more money? They ask, how can my money earn more money? That simple shift in thinking is where wealth building begins. One of the most common ways to grow your money is by investing in the stock market. When you buy a stock, you're buying a small ownership stake in a company. If that company grows and becomes more valuable, your investment can grow too. Some companies also share a portion of their profits with shareholders through dividends, giving you another way to earn. Historically, broad stock markets have delivered strong long-term returns. Although returns are never guaranteed and markets can go up or down. The key is to think long-term instead of trying to make quick profits. Picking individual stocks can be difficult. Even professional investors don't always get it right. That's why many experts recommend index funds or ETFs. Instead of investing in just one company, an index fund owns many companies at once. For example, an S&P 500 index fund gives you exposure to hundreds of large US companies in a single investment. This helps reduce risk because you're not relying on the success of just one business. For many beginners, this can be one of the simplest ways to start investing. Real estate is another way people make money from money. There are generally 2 ways it can generate returns. First, a property's value may increase over time. Second, rental income can provide regular cash flow. Of course, real estate usually requires more money upfront and comes with costs like maintenance, taxes, and vacancies. That's why it's important to understand both the opportunities and the risks before investing. Not every dollar needs to be invested in higher risk assets. Keeping emergency savings in an account that earns interest can help your money grow while remaining accessible. Bonds are another option that generally offer more stability than stocks, though they often provide lower returns. These options may not build wealth as quickly, but they can play an important role in a balanced financial plan. Money can also be used to create opportunities. Instead of spending your savings on things that lose value, you can invest in a business. That could mean buying equipment, creating a website, developing a product, or running advertisements to reach customers. A successful business can generate income that is no longer tied directly to every hour you work. While starting a business involves risk, it also has the potential for significant rewards. Here's where wealth really starts to grow. When your investment makes a profit, don't spend it, invest it. Now you're earning returns on both your original investment and your previous profits. That's the power of compound growth. The longer you keep reinvesting, the faster your money can grow. Before you invest, avoid these common mistakes. Don't expect to get rich overnight. Don't panic when the market falls. Don't put all your money into one investment. And never invest in something you don't understand. Successful investing is about patience and consistency, not quick wins. The best time to start investing was yesterday. The second best time is today. If you found this video helpful, leave a like, subscribe for more simple finance videos, and I'll see you in the next one.